Imagine this. It's 7 a.m., you're in Bali, the Wi-Fi is fast, the coffee is good, and your salary hits your account every month reliably from a company you've never actually visited. Now imagine it's 7:05 a.m. and your bank account is frozen. Your phone shows 17 missed calls. One of them is from Interpol. You weren't running drugs. You weren't hacking systems. You were doing compliance work. You were the person who was supposed to stop money laundering, and somehow you became the instrument of it. This isn't hypothetical. Criminal organizations have figured out that the most effective way to bypass anti-money laundering filters isn't to build fake shell companies anymore. It's to hire real compliance professionals, people like you, and weaponize your credentials, your expertise, and your reputation. Today, we're breaking down the terrifying trend of how experienced professionals are becoming accidental accomplices. And more importantly, how to make sure you are never one of them. Let's start with the data, because the numbers are striking. In the first quarter of 2026, postings for what the industry is now calling compliance as a service rules, remote, high pay, loosely structured advisory positions have increased dramatically on platforms popular with digital nomads. We're seeing spikes concentrated in Southeast Asia and Latin America. Think Thailand, Indonesia, Colombia, Panama. Now, some of these postings are completely legitimate. Remote work in compliance is real and it's growing. But here's what's also real. A meaningful subset of these postings originates from shell entities specifically designed to recruit credentialed professionals for their appearance of legitimacy, not their actual compliance function. Let me be precise about what that means. A criminal organization processing illicit funds through a payment platform doesn't just need fast transactions. They need someone who can write the transaction monitoring policy, someone who can train staff on Know Your Customer or KYC procedures, someone whose LinkedIn profile says 10 years in AML, former Big Four, CAMS certified, so that when a correspondent bank asks for due diligence documentation, the answer looks impeccably professional. They're not hiring you to catch money laundering. They're hiring you to be the reason no one looks closer. Now here's where it gets psychologically sophisticated. And this is the part most professionals don't expect. The bait isn't just money, it's identity. In 2026, there's a powerful cultural narrative around the compliance professional who escaped the office. After years of surveillance in traditional banking environments, every email logged, every decision reviewed, the idea of working independently, consulting remotely, being your own boss while watching the sunset over the Mekong River, well, that is deeply appealing, and criminal recruiters know it. What they offer isn't just a six-figure consulting fee. It's an entire lifestyle architecture. They offer flexible engagements with no fixed office requirements, payment in stable coins or through offshore accounts framed as international payment flexibility, vague deliverables. You're advising on process improvements and regulatory readiness. Prestigious sounding client names, often fabricated or borrowed from real entities, and sometimes an actual advisory board title that looks extraordinary on your profile. Here's a psychological trap. When you're living your dream life, your threat detection is suppressed. The same red flags you would immediately escalate in a traditional bank setting, unusual payment structures, clients in high-risk jurisdictions, transaction volumes that don't match the stated business model, those flags get rationalized when you're the one who'd have to walk away from the dream to act on them. This is called motivated blindness, and financial criminals have learned to engineer the exact conditions that trigger it. So let's get tactical. What are the specific patterns you should be looking for? Red flag number 1, vague scope, specific salary. Legitimate compliance roles come with defined regulatory frameworks, reporting lines, and measurable deliverables. If the job description says advise on global compliance strategy and the salary is $180,000 per year with no further specifics, that is a structural mismatch. Real employers who pay real money need real outputs. If they can't articulate what those outputs are, ask yourself who benefits from that ambiguity. Red flag number 2, payment architecture that avoids the traditional banking system. Stablecoin payments, crypto wallets, offshore accounts in jurisdictions with weak correspondence banking relationships, or multi-step payment structures through intermediary entities. These are not signs of a modern, innovative employer. These are the TBML indicators in disguise. You know this. Trust what you know. Red flag number 3, pressure to sign NDAs before you understand the business. Confidentiality and compliance work is normal, but if you're being asked to sign broad non-disclosure agreements before you've received a business overview, an organizational chart, or any substantive description of the client's regulated activities, that NDA is there to limit your ability to report, not to protect legitimate trade secrets. Red flag number 4, no verifiable regulatory footprint. Every legitimate financial institution operating across borders leaves a regulatory trail. Licenses, registrations, examination histories. If you Google a prospective employer's regulatory status and find nothing, no FinCEN registration, no FCI authorization, no MAS license, no local equivalent, that is not a small company being discreet. That is an entity that does not want to be found. And here's the hard one. Red flag number 5. It feels too good. Not a formal metric, not in any AML typology guidance, but as experienced professionals, we know the feeling. When the offer is exactly what you've been wanting, the lifestyle, the salary, the flexibility, the prestige, and it arrived unsolicited, that feeling of almost disbelief, sit with it, because criminal recruiters are very good at making their offer feel like it's destiny. That's the design. Let's be absolutely direct about what's at stake legally. Under US law and in most Financial Action Task Force member jurisdictions, you do not have to knowingly launder money to face criminal liability. The standard in many conspiracy statutes requires only that you knew or should have known that your services were being used to facilitate illicit financial flows. If you were the credentialed compliance officer whose policies, whose training materials, whose sign-off letters were used to pass due diligence reviews, and the transaction monitoring system you advised them on was deliberately designed to have gaps, your expertise is not a shield. It is evidence of your capability to have recognized the scheme. Asset forfeiture, reputational destruction, loss of professional certifications, criminal prosecution in multiple jurisdictions simultaneously. The dream life ends, and it ends loudly. Look, the digital nomad lifestyle is real, and for many compliance professionals, remote consulting is a completely legitimate and rewarding career path. I am not here to tell you that every flexible offer is a trap. What I am telling you is this: your expertise is valuable precisely because it can be abused. The same knowledge that makes you effective at stopping financial crime makes you a high value target for the people who want to commit it. Vet your clients with the same rigor you'd apply to theirs. Run your own due diligence. Verify the regulatory footprint. Get independent legal advice before signing anything that feels unusual. And if the dream is real, it will survive scrutiny. If it doesn't survive scrutiny, you just saved yourself a 7 a.m. phone call from Interpol. If you found this useful, subscribe, and I'll see you in the next video.